In the next few seconds, the latest quarterly inflation rate will be released by the Bureau of Statistics. Our business editor, Ross Greenwood, is with us live. Ross, this is seen to be the last piece of the economic jigsaw puzzle, isn't it, in terms of determining whether the Reserve Bank is likely to lift interest rates at its November board meeting. What is the market looking for out of this data?
Well, OK, so Ash has just literally dropped in this last second or so. The market was expecting 5.3%. It's come in at 5.4%. So that is the annual rate of inflation taken over a quarterly basis, and it compares with the previous number, which was 6%. So inflation coming down. The big question here is whether it's coming down fast enough, because, as I say, it was broadly expected to be lower, and largely that's as a result of a settling, in particular of many international prices, and with the dollar so low, it really does take some pressure off a few of the prices. But in particular, the fuel prices, say, for example, during the back end of this quarter started to rise, but have increased much stronger than that. You can see it here. We'll take you through some of the numbers as to what's taken place. But what I can tell you is the dollar has jumped off the back of that. So even money markets are already saying that they're anticipating there's going to be some sort of a reaction on the markets. We're just starting to get some of the detail of this as well. The one key number that you do start to look at, have a look at that there. There's the dollar, 63.78 US cents. It was sitting around 63.5, little higher than that just beforehand. Now, the important aspects of this are going to be the underlying numbers. So the trim mean, say, for example, came in at 5.2%. You can see here the trend of inflation over the period of time. History tells us that the inflation rate peaked at 7.8%. But do remember also that the Reserve Bank has indicated that it's allowing the inflation rate here to drift lower until the back end of 2025, back to that 2 to 3% band that it prefers the inflation rate to be at. But as Michele Bullock has indicated, really the question now is whether this inflation rate is coming down fast enough or whether more interest rate rises are expected.
Well, we have heard the RBA Governor, Michele Bullock. She said she's going to raise those rates if it's needed. So what do you reckon? Is this enough to tip them over on Melbourne Cup Day?
I'd suggest it's touch and go, because remember that this has come in at the higher end of the market's expectations. It's certainly not well below it. And then consider also that there is the impact of what's taking place in the Middle East right now, with Israel going to that area of Gaza, pushing up oil prices, creating uncertainty. This is the monthly indicator. And this is really, I suppose, the shock that really made the Melbourne Cup Day interest rate decision a live interest rate decision in terms of a rate rise. So the monthly indicator was rising. Now, that's really all about fuel prices. It's all about some seasonal aspects of that. But the fact that the underlying rate is really not moving down rapidly at this stage does sort of indicate again that there is some view that these rates need to rise. Australia's interest rates are much lower than comparable interest rates in other parts of the world. Australia has not been seen to be needing to have to push interest rates as aggressively as other nations. But the question now is, if it's not getting rid of the inflation, then almost the Reserve Bank has got no choice but to raise interest rates.
So, Ross, you mentioned fuel. What are the main prices that are rising as reflected in this data that affect all of this?
OK, let's take you through some of those things, because we're all highly conscious of the fuel prices, and just going through some of the things that really here you're starting to see. So, say, for example, over the past quarter, some of the big increases, housing, and that incorporates rents, of course. They're some of the big ones. You can see these are the annual changes. Have a look at even food prices, up 4.8%. People are seeing and feeling that. But that's starting to ease off, and especially as meat prices should be starting to fall now, as farmers are dropping a lot of cattle into the markets. You've got transport. Well, that's a function of fuel, but also a function of the falling dollar. The falling dollar means even that there's some acceleration in new car prices as well. The price of health, the price of recreation. And those two final ones are a real key for the Reserve Bank, because as Michele Bullock has said in the past couple of days, inflation is sticky. And as soon as you start to have sticky inflation, such as health, such as recreation, things that aren't easily explained through, say, movements in oil prices or food prices, that's when the Reserve Bank gets worried. And that's when it considers raising interest rates, which may very well come as a result of these numbers that have been dropped today.
Ross Greenwood, appreciate your analysis as always. Thank you.
Good.